Hey, this is Dallas with Strickland Life Insurance Company. Wanted to talk a little bit about living benefits because it's a word that confuses people. Some people think of it as maybe like critical illness or something that could be used within the 12 months of someone's life. Maybe they think of it as potential disability insurance if they're injured for a period of time. But it's become really robust. We consider living benefits an essential component of what we call the Family Systematic Risk Management Program. Living benefits can be included as part of a life insurance policy or purchased separately as an additional rider. Living benefits allow you to access a portion of your death benefit while you're still alive, specifically if you face a critical illness, chronic illness, or terminal illness. That's what we all know about. This money can be used for medical expenses, lost income, long term care, or anything else you need. The common life insurance living benefits and their potential uses. I'm going to start off with the basics, the ones that everyone knows about, and then I'm going to get into some new stuff that people need to know about. There's the chronic illness rider. It provides benefits for the policyholder to enable to perform who are unable to perform 2 out of 6 activities of daily living, the ADLs, such as bathing, dressing, eating, transferring, toileting, and continuance, or if they require substantial supervision during a severe cognitive impairment. It's useful because it helps cover the cost of long-term care, home health care, or assisted living facilities, reducing the financial burden on the policyholder and their family. Critical illness rider pays a lump sum or periodic payments if the policyholder is diagnosed with a critical illness such as cancer, heart attack, stroke, kidney failure, or major organ transplant. It's useful because it provides funds to cover medical expenses, experimental treatments, travel for specialized care, or to replace lost income during discovery. Now, the long-term care rider. It provides benefits if the policyholder requires long-term care services during a chronic illness or disability. This rider often overlaps with chronic illnesses riders, but is specifically geared towards the long-term care needs. So this could take the place of a long-term care policy. It's not short-term. If you can't go back to work, if you can't generate an income, then it stays with you. Covers costs associated with long-term care services such as nursing care homes, home health care, or assisted living, preserving the policyholder's savings and assets. Now, there's the disability income rider. For those who are interested in disability insurance, this is something you can either add on or is included in some plans. It provides a regular income if the policyholder becomes disabled and is unable to work. This rider may be included in some life insurance policies or available as an add-on. It's useful because it replaces a portion of the policyholder's income, helping them maintain their standard of living, pay bills, and meet financial obligations during a period of time. Now, the accelerated death rider, there are 2 types of disability insurance. Description. 1. It replaces a percentage of your lost income for a brief amount of time, typically 3 to 6 months. So it's something that you can use when you're young and you're working and you may have lost your job, or you may have gotten hurt short term, and then it ends and the policy continues being funded the way it normally is. Two, many short-term disability policies are automatically offered by employers as a benefit to their employees. Um, Typically, they pay about 60%. It's useful because it offers financial support for medical treatments, debt repayments, and other expenses, easing the financial strain during a difficult time. If anyone's gotten disability insurance, they know that it does not cover all your bills. And this is something that's built in to a lot of policies. Now, there's a waiver of premium rider. Waives the policy's premium payments if the policy becomes disabled or is unable to work for a certain period, typically 6 months or more. It's useful because it ensures that the life insurance policy remains in force without the policyholder having to worry about making minimum payments during a period of disability. So they waive your premium during that time while you're disabled or unable to work, typically 6 months or more. Now there's the return of premium rider. Basically, it returns all or portion of the paid premiums if the policyholder outlives the term of the policy or cancels it. So this obviously relates to term policy insurance. You buy it at 30, you pay $120 a month for it. It ends at age 50. After a 20-year term, you get typically all that premium back. Now those do cost a little bit more, but you get your money back. No interest, but you get your money back. It provides a form of savings as the policyholder can receive a lump sum return of premiums, which can be used for any purpose. Common explanations of usefulness: medical expenses. We had a client named John who was diagnosed with terminal cancer, uses the terminal illness rider to access a portion of his death benefit to cover the experimental treatments not covered by insurance. Long-term care. Mary, who's a client of ours, unable to perform her daily tasks due to Alzheimer's, utilizes the chronic illness rider to pay for home health care, allowing her to remain in her home. And then income replacement. Tom, I'm not going to say his last name, was disabled after a car accident, benefits from the disability income rider, which provides payments that replace the lost income. Premium relief. Susan, diagnosed with a debilitating condition, takes advantage of the waiver of premium rider, ensuring her life insurance policy remains active without additional premium payments. So for a temporary period of time, you don't have to pay your premiums, and then you pick right up where you started off. These living benefits provide essential financial support, helping policyholders arrange unexpected health issues and maintain their quality of life. Now, in a second segment, how much disability insurance do you need? Well, you basically need to add up all of your living expenses: rent, mortgage, groceries, health insurance, utilities, car expenses, auto payments, food and groceries, child care or education, household maintenance, subscriptions and memberships, entertainment, travel and leisure expenses, clothing expenses, savings, investments, retirement contributions, debt payments for student loans, personal loans, and credit card, and then even for charitable contributions that you committed to. And how much does it really cost? An example would be if you had a salary of $30,000 and the disability insurance cost between $300 and $900, monthly payments about $75 to $250. Example two would be $100,000, where the cost would be between $1,000 and $2,500. So that's $83 to $250 a month. If you wanted $200,000 in disability, your yearly cost is $2,000 to $6,000, monthly payments of $166 to $500. So it's 1.5% of your income. How should you get disability insurance? Well, first and foremost, always get it through your employer. It's very cheap, it's rarely used, and it's part of a package that they get to try to entice the employees into thinking they're getting a lot of benefits. Or through a professional organization. A con is that the professional organization may choose to stop offering the coverage at any time, which would terminate your disability insurance. You would lose coverage if they change professions or leave the organization, or the organization dissolves. You can get it through the government. There's workers' comp. Workers' comp pays a portion of your salary if you're injured on the job. You're not going to develop cancer on the job. You're not going to typically do anything more than maybe fall off a ladder or a roof or break an arm or all that. And it's really no substitute for disability insurance. Workers' comp covers some, not all, of your lost income if you suffered an injury on the job and developed an illness or disease because of your job. That was a thing during COVID where they were really trying to figure out what to do about that. The coverage can be provided by your state or through a private company. Pros to workers' comp insurance are that it's automatically offered to you free of charge. Cons are that it only covers work-related injuries and illnesses, and it may not be enough to cover your lost income. There's state disability insurance programs. 5 states are included in that. They offer short-term disability insurance. It covers a portion of your income for about 4 to 6 months, and it's paid through a payroll deduction. Now, on your own, one of the best ways to get disability insurance is to buy it on your own. This lets you get the exact amount of coverage you need and lets you compare coverage and prices from a variety of 130 insurance companies, which is what we have right now. Plus, you don't need to worry about losing coverage if your job changes or a particular organization falls apart. The best bet is to work with a licensed insurance agent to learn about your options and to get a disability quote. He or she can help tailor coverage to your exact needs as well. It's all up to you. Please see my bio below, schedule an appointment, and we'll have a conversation and talk about it. Thanks.